Hello and welcome to channel SGD NISM Certified Research Analyst. In this channel, I break down financial news, equity insight, company analysis, market update in a simple and easy way. So let's start today's RBI's MPC meetings update. RBI's MPC meeting held on 5th December 2025. Reserve Bank of India has cut the repo rate by 25 basis points, bringing it down to 5.25%. The Monetary Policy Committee kept its stance neutral, signaling flexibility for future actions based on data. This decision comes at times when inflation is extremely low and economic growth is strong, giving the RBI room to support the economy. Some key policy decisions are repo rate 5.25% cut by 0.25%, standing depository facility SDF 5%, MSF and bank rates 5.50%, and policy stance is neutral. Inflation CPI current versus projection data. Current CPI as on October 2025 is 0.25%, the lowest ever recorded, mainly because food prices have dropped sharply. RBI's FY26 CPI forecast is 2%, revised down from 2.6%. Inflation is well below RBI's target band 2 to 6%, giving the comfort for rate cuts. GDP growth, current versus revised outlook. Recent quarter 2 FY26 GDP performance was around 8.2%, the highest in 6 quarters. RBI's FY26 GDP forecast is 7.3%, revised up from 6.8%. This upgrade in GDP because of stronger demand, better manufacturing output, service growth, and healthy credit activity. External sector and reserves. RBI highlighted that India's external sector remains strong, backed by high foreign exchange reserves and stable capital flows. These buffers help maintain rupee stability even during global volatility. India's Forex reserves have been reported at approximately $686 billion as of November 2025. RBI noted that this level of reserves is sufficient to cover roughly 11 months of imports, a healthy buffer that supports external stability. Liquidity condition. RBI said it will manage liquidity actively depending on market condition. Open market operation (OMS). RBI will purchase 1 lakh crore rupees worth of government securities. Forex swap, that is $5 billion dollar rupee buy sell swap, will be conducted in December to inject durable liquidity into the system. Purpose of these measures are: first one, to ensure liquidity remains ample after repo rate cut and help to ensure smooth credit flow and transmission of rate reduction. Next one, to address concern over currency depreciation, maintain market stability and external sector buffer. Banking and credit update. Bank credit growth remains healthy across retail, MSME, corporate segment. NPIs continue to stay low, showing strong banking system. Digital payment, that is UPI, continue to rise rapidly. What this meeting means for economy: for borrowers, loan rate may gradually fall. Good news for home, auto and business loan customers. For businesses, lower borrowing costs support expansion, capex, working capital and new investment. For investors, rate sensitive sectors like banking, automotive, real estate and consumer durable may benefit. Bond yield may soften, especially long term bond. For savers and depositors, deposit rate may decline slightly in the coming month. What to watch next? How quickly bank pass on the rate cut to customers. Second, food prices trend, that is key driver for inflation. Global interest rate changes, strength of trade demand and corporate investment. And last one, liquidity level in the banking system. So final takeaways: RBI's December MPC decision reflect confidence in India's economic strength. With inflation cooling down and growth strengthening, central bank has taken balanced steps to support the economy while maintaining stability. Now, India enters into 2026 with low inflation, strong GDP growth, solid banking system, healthy external buffer, and supportive monetary policy. This is positive outlook for business, investors, and hosts. Stay connected for future updates.